Well, thanks again for joining us today. I'm Marlon Boulding with you. I am joined this time by Ted Seifried of Zaner Ag Hedge in Chicago, and we'll talk about today's market action here so far. Ted, we had the weekly export sales numbers that came out this morning, and then on top of that, we had some export sales on the overnight version, the flash sales of a bunch of soybeans to China in unknown destinations. So they made up a little over, 800,000 tons in the overnight sales. Your take so far on what we're looking at here. Let's take a look at these prices here, and I want to get your rating. Let's go to corn. Right now, things are kind of easing up a little bit. We're down a penny and a quarter in the March at $6.40 per bushel right now, about a nickel off our overnight high. Soybeans, they're hanging in there with some small gains. January 4 3/4 higher at 14.76 3/4. You would think, given all the export business, maybe there'd be more to it than that, but maybe it's all baked in the cake, as they say. March wheat in Chicago, 7 3/4 lower at 7.41 3/4 at the moment. In Kansas City wheat, we have March down 13 3/4. Here they go again. Now we're at 8.35 per bushel. That's 17 cents off of our overnight high. And in Minneapolis wheat, the March contract down 2.5. We're under $9 at 8.99.5 per bushel. And in cotton, March is now 12 points higher at 81.95. So, Ted, what do you think here? The soybean market not really responding very well to all the big export numbers, but it had quite a run earlier this week. Is that what that was all about? Are we looking at it in the rearview mirror now?
Yeah, first of all, Marlon, whenever you get a sale of 718,000 metric tons to unknown destinations, well, there's only really one buyer in the world that would buy that sort of size in one clip. So, yeah, okay, let's just say that one is pretty for sure China. All that being said, yeah, there was a lot of rumors of Chinese buying yesterday and, the day before. We've seen a string of that here this week. And that's really what's added strength to the futures leading into today. So now that we see that on paper, both in the form of a daily flash sale, sizable one, very sizable one, and a really good week of export sales, well, a lot of that was kind of known. That weekly export sales number did come in above expectations, so that should be lending some strength. But again, like you said, a lot of that got baked in the cake. We've already found a lot of strength so far this week. Now we have a USDA report tomorrow, and we're right up against some very key resistance. So the soybeans taking a little bit of a pause, kind of waiting. I wouldn't be surprised if we were to try to make a run at this later on in the day, closer to the close, but at least for the moment, we're respecting that resistance level and the possibility of something from the USDA tomorrow, although probably unlikely. This December report is usually a big yawn. All that being said, you look at corn, man, corn gets no love. You had really good export sales for soybeans, but corn was, it was within the range of expectations, but expectations at this point have been just so low. We just can't really find that export business for corn, which is extremely disappointing when you consider the weather concerns that are down in Argentina right now. And that means that global end users, which are some of the savviest and largest buyers in the grain markets, well, either they aren't concerned about Argentina or they don't think that they're going to have the demand further out in time where they feel the urgency to come in and start buying corn aggressively. If they were to do that, you would see a big turn in the corn market and we'd pay a lot of attention to what's going on in Argentina. But until that happens, we just really don't have anything to get excited about for the corn.
And on new crop December of 2023, corn market down 2 1/4 cents, but it is getting well under $6 now. We're hovering around $5.94 in the value there. And that could maybe psychologically change some opinions on whether people want to pull the trigger on advanced sales or not. It might change their mind a little bit. Ted, if you don't mind, let's stand by here for just a minute. We'll come back and examine what's going on in our livestock trade today after this. We're talking with Ted Seifried of Zaner Ag Hedge, and now I want to take a look at our livestock trade. Let's go to live cattle on the big board with our quotes provided by Bar Chart here. And we had been trading about 20 to 30 cents higher earlier this morning. Right now, Ted, things are just narrowly mixed, not doing much of anything. February down a dime at 153.45, and now you have April down a nickel. But June and August are actually about 10 or 12 cents higher, so just kind of floating around here. Now, on the feeder cattle market, on the other hand, we are starting to surge. January feeders up $1.62. We're at 182.52. That's a dime from our high of the day. March now up 107 at 184.32. You have the first 4 contract months all over $1 higher now. And on lean hogs, now they are doing the opposite thing. You have February lean hogs down 272 right now at 83.92, and the April contract down $2.42 at 90.40 per hundredweight. You have that February contract now trading about $2 off of its earlier high this morning. It looks like the hog market may be in trouble. Of course, the weekly export sales numbers, I guess you can understand why they would be in trouble, but do you think there'll be more to the downward risk than what we have today here so far?
Yeah, unfortunately, you have a chart that's suggesting that might be the case, Marlon. And like you said, export sales, we were not expecting a negative number, and a combined negative number between this year, this marketing year, which is about to be over, but also for next year. Usually, when you see cancellations at the end of a marketing year, a lot of that gets rolled over into the new year. It's just a transfer, and it's an issue of time rather than want. This time, it was not the case. So the net cancellation number that we saw, and a fairly sizable one, is weighing heavily on that hogs market today. We took out the low that we had towards the end of November, which, if you remember, we quickly reversed and actually went back up and made a new recent high. We've not been able to hold that strength. And in the last 3 days, it's been sort of a precipitous downfall in the hogs. I think that's suggesting that late November move to the downside was legitimate. And now we're trying to extend that lower. So today's low will be very key. If we can hold it, maybe you get a bit of a corrective bounce. Maybe you can stay in this range between 80, 83.50 and 92. But if we take out that 83 mark in Feb hogs, that's a really big problem and suggests that we get trade down towards that gap around 79. So big day for the hogs. And you don't like the look that it has right now. In the meantime, like you said, cattle treading some water pretty nicely. Feeders higher. I think that's, corn not following through to the upside from yesterday's strength, I think is a big win for the feeder cattle market. And cattle, I'm worried cash starts to come down. Packers margins are under a bit of pressure. But I don't know if we need to really see a major break in the cattle market. Domestic demand seems really very good.
Well, great information. Thank you, Ted, for joining us today. Look forward to next time. Ted Seifried of Zaner Ag Hedge with us. That's a look at our markets at mid-session. Janet, back to you.